We're in an interesting market right now where stocks keep grinding higher and higher each day, but at the same time, the trend fragility is growing as well. Meaning it's like a house of cards being built right now and you're just wondering when it's going to topple. Or it's like a performer on stage doing a great job, everyone's having a great time, but they're getting closer and closer to the edge of the stage and you're just wondering, are they going to fall? Are we going to be able to record it and post it and get a bunch of likes? That's basically where our market is right now. So let's get past these weak analogies and jump into the research to see what actually is going on. And of course, as always, we're using our research from MacroOps, our global macro research and consulting firm. So the Qs right now, which is the NASDAQ, it's in a neutral to bull quiet regime, or a blended bull. And don't get too caught up in these names, but basically what it means is that this is a time in the market where the best sell setups are going to fail. Meaning you don't want to go short or anything like that, and the market is going to slowly grind higher. This is not the type of market where you usually see a top. Markets usually peak in bull volatile regimes. So if you look down here, these dark green bars, that's bull volatile or volatile. I don't know how you want me to pronounce it. I don't care. But you see, when it gets into these green bars, that's where things usually turn around. But in this low volatility environment, this is when we'll see the steady grind higher, which is exactly what we have been seeing. Now, in this graph, you can see that the best returns for the NASDAQ come in this neutral and bull quiet regime, or this blended bull as we talked about. So the NASDAQ spends most of its time in a bull quiet regime, as you can see by this chart down here. This whitish grayish line is bull quiet, and the light green is bull quiet and the grayish is neutral. And you see it spends the most days here, which makes sense because indices basically drift upwards over time. You're better off having a positive skew than a negative one. Doesn't mean don't look at the downside, because you know that's what we do here. But if you're trying to call tops and short all the time, that's usually why you're getting screwed and you're not making any money. So even, when we're looking at the downside in these videos, we are usually long. That's because we follow what the market is doing, and if it's going up, then we want to be buying. Short-term breadth dipped near oversold levels last week. So you can see this red line right here, it hit this green area, which means it's oversold. And that's actually a bullish sign. So these levels tend to coincide with durable bottoms unless the sell-off morphs into a larger bear market like 2018 and early 2020. And this is in the Russell right here. So again, another bullish sign. Now those are the bullish points going for this market, but there are some things underneath that are making everything fragile, as we were talking about. So the spread between the percent of members trading above their 200 and 50-day moving averages is at its widest point since early 2011. What's that mean? Means that while most stocks remain above their 200-day moving averages, a large number of them are now trending below their 50 days, which is not good. And these are all breadth indicators, right? We want a large amount of stocks moving together. We want them all to be staying positive. Now, the fact that a number of them are below their 50-day means that breadth is waning and momentum is kind of falling a bit. So this type of action typically precedes intermediate peaks. Our own trend fragility indicator that we use at MacroOps is now in the 98th percentile. So our indicator basically aggregates a number of sentiment, positioning, and technical data and spits something out. So the last time this indicator was this high was in January of 2018. And our volatility-based nervous and numb indicator also shows rising nervousness about the durability of this trend. So we got stocks slowly grinding higher, but the actual inner core of everything is rotting. Large spec net positioning in the SPX is in its 88th percentile and rising. So the last time positioning was this bullish was in February of last year, right before the crash. So again, another sentiment indicator, right? And what do we know? If people are super bullish, that's actually bearish for the market, because that means they have all their money in, they're going on leverage, they're going too far. So then there's a higher probability that we get that pullback and reversal. TD Ameritrade's IMX indicator, which I'm sure you've seen before, we talk about it a lot. It measures the actual flows and positioning of millions of retail accounts, and it's currently at its highest level on record, recently surpassing the previous January 2018 high. So you see there's a lot of similarities here, right? And you remember in 2018, that was not a good year for the markets. We had a long period of just volatility where by the end of the year, we were flat. And remember, this goes back to this thesis that we've been talking about the last few weeks about the buy climax, the dip, and then the 18 months of sideways movement. So we're currently in the buy climax stage, but things are moving into that drop and sideways movement. So Alex sums it up here, and he's our head researcher. He's the one who writes all this, and then I just repeat it in these videos. Great job from me. So the trend is still up, and credit is still confirming that trend. So the path of least resistance is higher for now. So we should expect markets, to keep trending higher. But this comes with very high trend fragility, as we've been talking about. So that means that we want to stay long, but be very responsive to critical changes, because when the turn comes, we'll likely enter an extended sideways to down market regime. That's what I was talking about. Buy climax right now, then we get the drop, then we get the sideways. That's the current thesis. Can that change? Absolutely. That's why we update this every week. Our composite growth model predicts that we're moving from a recovery and growth phase into a slowdown. And a slowdown is where the growth is still positive, positive, but the delta is lower. Delta meaning the change in growth. So we aren't growing at as fast of a rate as we were before. So in a slowdown regime, as you can see in this chart, the assets that perform pretty well are the Qs, which is the NASDAQ. Then you got bonds and high dividend payers. So that's where you want to keep your eye on, which works for us in the Fallible system because we're focused on the NASDAQ. So that sounds good. Now what's interesting is how this affects precious metals. I know a lot of you are tracking gold. Well, a while ago we pointed out how gold tends to respect its monthly Bollinger Band midline when in a bull trend. So if you scroll down here, you can see it hit this midline right here, and this is the monthly chart, and it bounced. You can see multiple other instances when it hits that midline and then keeps going. So positioning is still pretty crowded in precious metals, but they're in their strongest period of seasonality, which lasts until about mid-September. So we might see a little bit more sideways chop in those precious metals, and that's going to wring out the weak hands. And then the resumption of the bull trend in those precious metals like gold, silver, and all of that will likely continue once the buy climax in equities ends. The materials sector is seeing a spike in MACD buy signals. It also has one of the better relative forward EPS profiles. So one of the companies that we're looking at is Corteva. I don't know why I said it like that. Corteva? CTVA. That's why they have ticker symbols, because I can't pronounce anything. They're an agricultural tech play headquartered here in the US, but with operations around the globe. And they got a nice chart right here. If you can see it, it's a 3-month pullback with a strong overall uptrend though. And you can see it's nearing its 200-day moving average, which is this line right here. So it might be a good entry point. We'll be keeping it on our watch list at MacroOps. Also guys, great news that is very relevant to markets. I finally got my PlayStation 5. Thank God. I don't know if you can see it right there underneath the TV, that big mammoth of a beast. But I was shocked. I finally won one of the lotteries on Friday. My order went through at Target. Then I had to go to Target to pick it up. It was in a bit of a shady part of town. But if there's a Target, I mean, how bad could it be, right? So I walk up to the counter, finally getting my PS5. I can't believe it. I keep thinking they're not going to have it. But she comes and she brings it out. And then she tells me, you know what? Be careful with that in the parking lot. And I'm like, be careful in the parking lot? Why would I? I'm a famous YouTuber. No one's going to rob me. They'll probably just throw money at me. That's what happens to YouTubers, especially at my level of fame. But sure enough, as soon as she put that PS5, and this thing is huge, right? As soon as she puts it on the table at the little pickup counter, this older gentleman behind me just stops dead in his track with his cart like this. And he's like, "You have PlayStation 5? I want." And now most people would see an older guy and be like, it's just this old guy, right? But me being raised as a good Indian boy that respects my elders, I was scared out of my mind because this old man was going to be the one to rob me. And then he would go home and play Spider-Man. So I told the Target lady, you better give me a bag for this because I can't take these risks with these old men in their shopping carts. So I got the thing, put it in this big red bag, walked really fast through the parking lot, got to my car, got home safe. Thank God it's here, as you can see it, or here. So things are looking up. I can only imagine that all of us will make a bunch of money in the market now because that's how things work, right? But moving back to markets, one more thing I wanted to go over in this video is actually a portfolio review of our MacroOps portfolio. So every month we send out a note to our collective members who get access to exactly what we're doing. And we go over what we did and then analyze what we could have done better. And that's the only way you get better at anything, right? Including trading and investing. And by the way, that MacroOps collective should be opening in a few weeks here for enrollment. And that's only for people that basically want to do this professionally. So if that's you, make sure you're signed up for the MacroOps email list and you'll get an email telling you when it's open. But I'll give you a little sneak peek into what we do in that service. Because like I said, MacroOps research and consulting firm, right? So we got a ton of research that comes out there, including research around our own process. Because you know, when I rant about the Fallible system and everything, it's all about process. That's what professionals focus on. So this right here was our June 2021 portfolio review. And the MacroOps portfolio dipped about 5% during the month when the S&P returned 2.3%. Surprise, surprise, we aren't positive every month. Why? Because things work in cycles. And if you're going to look so short term at just 1 month, and I'm talking about returns here, not process, because process you could look at all the time, well, you're going to drive yourself crazy. So being down 5%, that doesn't worry us at all. Since the start of 2021, we've returned 31% compared to the S&P's 16%. So nearly double. And I think earlier this year, it was closer to 50%. So is that bad that we went from like 50 to 30? No, that's a part of the game. So even when we had super high returns at the beginning of the year, we know that could go away, even though we're executing our process properly, because a lot of trading and investing is basically working with what the market gives you. You can't force anything. And like I said before, everything's going to go through cycles, which is why I saw some comments complaining about our Fallible system. It's down. It's been down for a while. For me, I don't really care because I'm used to these cycles. Might be down now. It might be beating the market by the end of the year. You don't know. And based off the research research that we're going over in this video, the market could end up pretty bad by the end of the year. It could lose all the gains that it had. You really never know what's going to happen. All you know is that you need to stick to your process and potentially improve it depending on what you're using. So in the Fallible system, the process is kind of set. On the MacroOps portfolio, we're always kind of iterating it. It's just different styles. One's discretionary, one is very system-based. And actually on the Fallible side, we are making some tweaks. So I should say, even with systems, you still make tweaks, but they're much fewer. But anyway, I wanted to go over a few parts of the portfolio review because there are a few equity names that you may want to add to your watch list. The first one being Kura Sushi, which we've actually talked about on this channel. The ticker symbol is KRUS. So this is the sushi place with the automatic sushi makers and dispensers. Like the sushi comes around on the conveyor belt. So when you take it off the thing, you get charged based off that. It's like a new age sushi restaurant. So it's a company that we love, but not at the current price. And this is one of the ones that we actually sold this last month. So we actually booked a 95% gain in this stock in less than a year. So the stock currently trades for 5 times NTM sales when we bought in the low 2s. Now what we would have done if this thing had options, and unfortunately it's too small to have options on the stock, we would have sold some calls and held our equity, or just trimmed half and sold puts at significantly lower prices. So basically, if you sell a call and hold on to your equity, you're hedging, right? Same thing if you trimmed your position and sold some puts. And these are just different ways to manage a stock versus completely getting out, which is what we ended up doing. Now, you also gotta be careful when you're doing all these different things with options and hedging, because if you don't do it the right way, then all you're really doing is wasting money. One core thing that you really need to even make hedging worth it is that you truly believe in the stock and the long-term potential. Because if it's just a trade, then forget about it. In our case, because Brandon, he's our value investor, when he's picking certain equities, they are very, very much long-term investments. So it makes it worth it to do some of the hedging and the option strategies on them. But for most people and in most situations, it's better just to buy and sell the common stock. Next one I wanted to talk about was a stock that we just bought called Redfin, ticker symbol RDFN. And this is a residential real estate brokerage company. And the reason why we like this company is because it's fundamentally changing how consumers buy and sell homes. So this thesis of ours hangs on 2 hypotheses. One is that real estate commissions are actually going to go to 0. And 2 is that the way consumers buy and sell homes in 10 years will look vastly different than today, which I really hope that's the case because it's horrible trying to find a house right now. You got to pay $40,000 over the asking price and then sacrifice your firstborn. It's terrible. But Redfin is playing a more complex game. They're paying agents a full-time salary and slashing their commissions. So it's all in the hopes of capturing a massive shift in how consumers buy and sell their homes. So here's our thesis, and we call it a variant perception because we're basically saying, what do we think that's going to happen that the market isn't pricing in? And this is, again, a more of a value approach to it versus in the Fallible system, we ride trends, right? Momentum. So what is the market pricing in and going to price in even more? Variant perception is slightly different. And that's what's great about the market. You could do it any way you want and make money. Well, any way that makes money, that fits in line with how the market works. But anyway, if real estate commissions go to 0 because the industry is so competitive, agents are going to end up joining a brokerage that offers security, inbound deal flow, and transaction bonuses tied to deal closures instead of the home prices. So not so many individual real estate people anymore. And Redfin is the only company that has built a business model around a salaried agent. So real estate agents aren't usually making salaries. This is very different. So the more agents on the Redfin payroll means the more homes viewed, sold, and bought through the Redfin platform. And then more homes on its platform allows them to cross-sell other services like mortgages, title insurance, iBuying. So they take over the entire buying and selling process and create a seamless online first experience where you can do everything right there. And it's at the lowest cost possible, technology first. So Redfin's market is actually so large that even if we're directionally correct on our assumptions, we'll make a bunch of money. And Glenn Kelman, who's the CEO of Redfin, is one of the game's sharpest and most humble operators. So we have an 8% position in our portfolio, so pretty big. It's a big bet. So again, RDFN, one that you might want to add to your watch list. And those portfolio reviews, we do them every month because, again, we are so focused on process. And I've been talking to a lot of our Fallible members, and I've been seeing some of the things that they've been struggling with. One of them being, once again, that process and the focus on it. And I actually made a video, which you could see right here, talking about some of the things that I've been hearing from a lot of you guys. Video's called 5 Reasons You Can't Become a Consistently Profitable Trader. But don't worry, I obviously help you through those problems. So definitely click here to watch that video right now. Because again, trading and investing is all about the process, especially if you want to make consistent money in the market. So click here and make sure one of these things isn't holding you back. Click that video and I will see you there.